Hi, welcome to this video day. It's the 24th of August. It's Saturday. Just going to give our updates out for the Japanese yen. We'll look at it against the USD, also against the euro and the Canadian dollar. We'll go to the charts in a moment. Now, regular viewers will be familiar with our yen view, which is we are just so heavily bullish longer term. And we've seen a nice move in the yen. Really great profits, far more to come. Everything favours the yen longer term. Now, in terms of a longer term trend trading strategy, I'm also going to go through some tips on holding big trends without banking early, and also, finding the really big key levels that matter. Now, in terms of the charts, we're going to go and take a look at them right now, but please do keep in mind, it is my view as of this moment in time. It can, of course, change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including the three we're going to look at right now, you can get live access for a limited period on the link beneath this video. Right, in terms of trade setups, the first one we're going to look at is USD JPY. Right, the USD JPY monthly chart. Just very quickly, first of all, before we go to the daily chart, because my target is on the longer term chart. I can't see it on the daily, and I also want to go through how this trend has evolved and what might happen next. And in terms of this big move up in the USD, okay, massive move, then we have a retracement, another move up, then we go sideways, and could get through 111 despite the Fed having a rate hiking bias in the period. Now, of course, we've shifted to a sort of rate cutting bias in my view, and you've seen the dollar come down quite nicely this month, haven't you? She's now at a key level of support. It's a massive level. A lot of institutional order flow around this level. It's 105. If we break 105, then we're going to go a long way to the downside. It's also a sell on rallies, and I'll go through the key level of resistance on the daily chart. But we've got a feeling that we're going to be going a long way down. And a lot of technical analysts might say, well, 100 looks pretty good support. I don't think so. With how undervalued the yen is, it's severely undervalued historically. In the background we've got in the global economy, we should go down to this level here, 80, which is obviously, well over 2,000 pips. I feel the move in USD JPY is just beginning. Obviously, that's a longer term target. You've got 90 and 100 in between as support levels, so to speak. But the way the fundamental sentiment look behind the chart, we could see a really big move to the downside. So let's go to the daily chart and draw levels of entry, stop, and target. USD JPY daily. I'll draw my levels in a moment. Now, in terms of if you want to follow big trends, I've said this in numerous videos. Can't do it purely technically. You can't say, like we've just done on the monthly chart, this pair could move 2,500 pips to the downside by looking at technicals. You need to know what's going on behind the chart. If you know what's going on behind the chart with simple fundamental and sentiment analysis, you can project big moves, okay, and you can have the confidence to stay with big trends without banking early, and it will help you find the really big levels that matter in terms of support and resistance. Now, in terms of fundamentals and sentiment for us, just bullish the yen, go through the 5 points. Global economy is slowing, slump is accelerating. As long as the global economy continues to slow, the yen will remain firm. You can see it from the data. Big slump in the global economy that's getting worse. The yen severely undervalued and the number one safe haven currency. So it'll keep moving up longer term. Trade wars are in the mix, obviously. Even if trade wars were solved, the global economy will not return to growth quickly. A lot of people in the media say that it would. Trade wars are the real problem. They are a problem, but they're more of a psychological impact on global growth, if that makes sense. There's a huge kind of psychological blow to investor sentiment, okay? We've said before, trade wars, they're going to get worse before they get better. No easy solution or quick solution coming. Both China, the US do not want to back down. We saw things escalate a little bit on Friday. Now, Donald Trump trade war policy, obviously in full swing with China. We've got the G7 this weekend. He's not getting on well with European leaders. I don't see this being a happy families meeting, and he could come out with something again to create for more risk off, which will help the yen. We know he's not happy with Europe's trade surplus with the US. Might he threaten to start a trade war with Europe? We don't know, but I just don't see it being a happy meeting. You've got plenty of geopolitical problems in the world. I've got my eye on Hong Kong. Yeah, if China decides to clamp down on Hong Kong, that'll really cause risk off in global financial markets. And yeah, if we look, we know global growth is slowing. Central banks are pretty powerless. Got overinflated asset prices like stocks. Yeah, it's not looking good. When it's not looking good in the global economy, it's looking good for the yen. So big money flows are going into Japan. Japanese investors, biggest overseas investors in the world, pulling their money home. Foreign money is going into Japan. It's seen as a safe place to park your money in times of risk off. And Japan runs a huge current account surplus as well, which is bullish the yen. So basically everything points to more yen strength longer term. Now, in terms of where we've been playing this trade, when we got up towards this 109 level, there was a bit of optimism about trade wars being solved. We didn't think they would be sold off the level. Got the break of the 20-day moving average here, which you always look for in terms of when we're following big trends. We always want it to snap, and then we're looking for it to provide resistance. So we come down, big blue up there, red, come up, touch the 20, and then down. Okay, so we very often have got that 20-day moving average as our first level of resistance. Okay, so when we see a big blue like this coming up, we're not going to be panicked out of the trade. Okay, in terms of the trade so far, it's 108.80 in, and what are we? 105.35. So about what is that? Is that 350 pips, isn't it? But I think we're going to get a lot more. Now we've come off the 20-day moving average. Draw a trajectory in there, which lines up with the 20 in those two candles, and then you've got a bundle of bodies there. Okay, so basically about 106.70 sell on rallies, and of course you can sell on a break lower. Got to get through these candle tails and away from the 105 level though. 105 massive level. There's big orders around the level. So basically, say frequently, if you're trading through a round number, a really big one, get clear of it. 104.70 at least, you know, because then the battle of the orders colliding is over. Hopefully in your favour. So 104.70, I think, on a downside break back to about 106.70. If you're selling a rally, where would you put your stop? You want your stop one level back. Okay, that's the 107 level. So there's your first resistance. There's your second. Do not have your stops behind here. That's where a lot of traders will put their stops. Retail traders, you get stop clusters there. You don't want to be there. You want to be back behind that level. We're back at 107.60. So sell on the rally or break lower. I think, yeah, we've seen some downside, but this trend could see accelerated selling to the downside. Okay, so we're looking for a really big move down. Now we're going to have a look at Euro JPY. This is one of our favourite long-term trend following trades. I really love the look of this trade setup. So we'll go and take a look at it. Euro JPY monthly chart just very quickly. Now we've had a short bias in this pair all year, and it's moved quite nicely to the downside. Yeah, it's a good downtrend. And in terms of a key level we pointed out in a video a while ago to break, it was 120. That level is now broken, and I think we're going to see accelerated selling to the downside, and we will go all the way down towards the 96 level, and we could even overshoot this level if we look at how undervalued the yen is and how overvalued the euro is. A little upside in the euro, plenty more downside to come. So let's go and take a look at the daily chart, do some levels of entry, stop and target. JPY daily chart, and in terms of this pair, we've held the trade for a good while. Came in at 122.80. This is where we like the 20-day moving average. We get the snap of the 20, tries to get above it and away from it here, but can't. Down, back to it, can't get through it, down, nearly back to it, down. I just really like the 20-day moving average as an extra level of resistance in a downtrend. Yeah, it's highly effective, but really only in strong up or down trends. Okay, now in terms of playing this pair, how would you play it if you wanted to get into it? My own view is you've broken 180, round number. We could get back up to 118. First level resistance, I'm going to put there, just on those tails. In round number turbulence, about 108.30. And this 20-day moving average will sneak down if price came back up to provide an extra layer. So that's your first level of resistance. So you can sell back to that level. In terms of stop placement, behind this level here. Now in the member center, I do have it back behind 120. But now we've broken 118, I'll bring it back, or sorry, bring it down behind these two bodies here. So you get the big move up, then the rejection. That one there failed as well. So I think that's good second level resistance. My own view is if coming into this trade, you could sell a rally. But if it doesn't rally, I just come in with a small trade. Then you can add later on. Plenty of downside potential. And yeah, once you've got your big fundamentals and sentiment lined up, you've got directional bias, like I said earlier, your technicals can be very, very simple. Yeah, it's a 500 pip trade, and we have not done anything complicated, and there could be plenty more downside to come as well. Right, now we're going to look at CAD JPY, which is a pair we really like the look of as well. The CAD JPY, there's similar setups in AUD JPY and NZD JPY as well. But I'm just going to look at CAD JPY today. The other pairs you'll see, they're similar if you go and take a look at them. Right, CAD JPY, let's go to just for the last pair, CAD JPY, I'm just going to use the chart from my member center. Now, in terms of the CAD, and it applies to the AUD and the NZD, they are the most vulnerable currencies to risk off of the majors, and also a slowing global economy. So we're looking for this one to become a really good downtrend. And you've done videos on it before. We did have a nice break off the 83 level through the 20. And I moved my stop just too close below the 81 level. In hindsight, that was not a smart move. I should have kept it back behind 81. Okay, but we booked out a little bit of profit and we come straight back in on the red. You can see my entry level of 81.30 down. Then she's trying to get back through this 20-day moving average down. Now, if you look at the downside target, 70, then 60, it's a long way on the downside. So in terms of this trade, similar to the other two, you can sell her back towards this 20, stop back behind the key 81 level, okay? Big monthly level. Or just take her on a break of 79. I put 78.80, just 20 pips clearance I want. And I think we'll be off to the downside. So this is another good trade, actually. It's a long-term trade. I think it's just getting started. AUD and NZD have seen a little bit more downside than the CAD. I think the CAD is so overvalued. And also, in the risk-off environment we've got, it's going a long way to the downside in our view. So there's 3 yen trades. We're very bullish, obviously. Plenty of others to look at. You can look at NZD, AUD, short, or even some of the exotic currencies, the ones that will really be hammered in risk off or slowing global growth, which we've got now. Yen for us, great long-term trend, decent profits, and far more to come in our view. Right, that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.